So tell us a little bit about what you expect in terms of consumption demand this year as we continue to see this virus resurgence in Hong Kong.
Well, demand patterns have definitely changed with people working from home, with factories closed down. And so it's been a dramatic change right across our markets. Overall, consumption has been down by a few percent on average. But for us, the impact has been more how to keep the business running, how to keep our operations secure, how to keep our staff and our customers safe. We're not a business that can shut down. So it's how do we maintain operations as normally as possible while still recognizing the health risk and looking after the health and safety of our people and our customers.
You, of course, had experience with SARS as well. So how do you gauge the economic impact, not only in Hong Kong, but also on the mainland? And when it comes to industrial production, when do you expect China's to return to pre-virus levels?
Well, SARS, compared to COVID-19, was relatively short-lived, and we did see a bounce back in the economy. Hong Kong was perhaps the hardest hit by SARS, but it did bounce back, and it bounced back relatively quickly. We've never experienced a prolonged lockdown that we've seen with COVID-19. But in different markets, we've seen very different characteristics. In China, there was a very strict lockdown, industry almost completely shut down. But once the virus was under control, we did see a strong recovery and a strong bounce back around May. So China, we've seen sales bouncing back. Here in Hong Kong, it's been some impact, but we have relatively little industry in Hong Kong. So people working from home has a much less significant impact on sales. Australia, we're seeing a second and potentially an extended period of lockdown, particularly in Victoria. So it's had a more dramatic impact there. So it really depends on how the spread of the virus, how lengthy the lockdown is, and also the structure of the economy to really see any impact on electricity sales.
You mentioned Victoria, and of course we have a bit more visibility as to what these latest restrictions on industry across retail services will look like. What's your best, I guess, guess scenario at how that impacts your business?
Well, for us, we have to maintain our operations. So really it comes down to how we manage just the normal, keeping the lights on, keeping our power plants running normally, keeping our contact centers running, and doing it in a way that reduces the risk. So people still have to go to work in our industry. We can't afford just to stop maintaining equipment. It has to be maintained, otherwise it would break down and the lights would start going out. So for us, it's putting in place very strict working practices. It's making sure that we keep distance and separation, having split working teams. So it is quite a dramatic change in the way that we conduct our business.
What do you see as the impact on power demand, though, as a result of the latest lockdowns in Victoria?
We've already seen around a 5% reduction in demand for electricity across the national electricity market in the eastern states. So whilst it's the extent of the lockdown now in Victoria has been extended and is much stricter, we do see some reduction. But whether people are in their office or at home, they still need electricity. And it's even more important when you have the economy in a very fragile state that the electricity supply does keep its high levels of reliability that people expect. Imagine how disastrous it would be if the lights started going out, if we started losing the internet. So that's really where our focus has to be.
On the broader industry, there's been talk about the rapid growth in solar and wind capacity in Australia, that will bring forward the coal plant retirements in Australia. Do you see a risk of that?
Well, climate change doesn't go away, and decarbonizing the electricity supply is something that we still have to do, even with COVID-19. So developing projects and developing renewable energy storage, shifting from coal to gas, all of that needs to go ahead. we can't just put that on hold. So in Australia, our subsidiary Energy Australia has acquired an interest in a pump storage scheme in Queensland. We're continuing to absorb more renewable energy into our system and looking at what we can do to firm up that renewable capacity so that we can keep the grid running reliably. So building more gas-fired generation and extending some of our gas stations in South Australia and also in New South Wales has been an important task for us. So that increase in renewable energy is important for Australia to make its energy transition, and we have to have the replacement capacity with renewable energy plus the ability to make that stable with energy storage and firm capacity in order for that transition to progress.
Richard, what do you make of the nuclear power business in China? Because we have seen the pace of new nuclear reactor approvals in China come virtually to standstill. What's happening there?
The nuclear industry is growing. It's still a relatively small part of China's energy mix, but CLP has been an investor in nuclear energy going back into the 1980s with our Daya Bay power station, which supplies around a quarter of Hong Kong's electricity. It's been very reliable and a very fundamental pillar in our decarbonisation strategy. So we extended our investments into the Yangjiang nuclear power station in 2019, and we see that as an important way to decarbonise an energy sector in a country such as China, which has enormous scale and an enormous challenge.
Has the issue of price cuts to support local businesses following the pandemic been an issue in terms of what you're seeing in your bottom line, particularly in China?
We have been trying to support businesses as far as possible. We work with our customers in Hong Kong. We've been providing support in terms of making extended payment plans for customers that are seeing cash flow issues. But in small ways as well, the restaurant sectors have been badly hit. So providing hand sanitizers on a massive scale has been a way that we've been able to support our customers. Each industry is affected in different ways, and each sector has specific needs. So we've been able to use the scale of our operations to help our customers in many different ways.